It's going to be a busy few weeks, brother. Oh, but I am back.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. The markets are boring. The markets are choppy. We're holding critical support. We can't seem to take out critical resistance, but this is all part of trading. So I thought, what better time to review the Bitcoin top and bottom cycle, because it has been playing out to a T since 2013. Guys, if you want to join our Discord, be sure to check out marketmakers.trade. That's our website. You can join right through there. If you want all of our videos fed to you that we put out throughout the week, myself, my staff, my education, my custom indicators, you can get all of that on YouTube by clicking the join button on YouTube. A lot of people like that method. And of course, if you want to trade these markets, check out Bitunix. It helps support the channel. Be a Market Makers VIP on Bitunix. All you need is an email to trade there. Fantastic exchange to trade your cryptos. Let's look at the Bitcoin market cycle. This is where we are at. Now, when you talk about cycles, everybody can come up with a cycle. Look, the 4-year cycle is very well known. This isn't based per se on the 4-year cycle. It's based on the exact tops, exact bottoms, and it works out to roughly 4 years within, I think, within 4 weeks of each other since 2013. And same with the bottoms. After Bitcoin makes a blow off top, the bottom is in about a year since 2013, a year after. So until that cycle breaks, ladies and gentlemen, this is the Bitcoin cycle. We look back, I want to look at some tops because everything in 2025 is taking longer, right? I want to look historically at the tops. So back in 2013, you topped late November. It's a weekly time frame. Back in 2017, you topped mid-December. Back in 2021, you topped early November. And of course, I told you I'm looking for a top. I was guessing November plus or minus 4 weeks based on the cycle. Could be looking at a December top because everything's taking so long to play out. One thing we know for sure, I do believe higher prices are ahead. 132 has not been hit yet. It will easily be hit. Between that and the 168, we have 150. So these are your key levels that you want to watch for the Bitcoin blow off top. And we have the timing. We know that every time the RMA passes through the beach ball, top has been in within 30 days, right? RMA passes through the beach ball, top is in within 30 days. And here we are at 61K and some change. We have to pass 69K. Once we do, top should be in within 30 days if the cycle repeats. And again, on the bottom cycle, every time the top comes in, December 2017, bottom came in a year later, December 2018. Top comes in November 2021, bottom comes in November 2022. This dovetails with my 100-year cycle video I put out. Go watch that because the 1920s are the 2020s. Bitcoin's going to top, it's going to sell off, and then we're going back up. Same with the markets, okay? I don't think we're having any type of catastrophic collapse next year. It'll be a normal cycle. Sell off in the markets, sell off in Bitcoin, and then it's going back up. So let's look at this. When we're looking at this, what do you need for Bitcoin or crypto in general to go higher? You need more money in the market. Total crypto market cap, 3.95 trillion has been the 1618. You got above it, Bitcoin got to 125. You try to get back above it again, and you sold back off. So when you look at this zoomed out, you have a Wyckoff fractal, and you have a coil. Okay, this coil doesn't have a bias yet. You're putting in some co-equal lows here. You have a lower high after a higher high. Right now, you still have a lower high. So again, you're just going sideways. It'll get a bias if you can start making some momentum, come up, hold a higher low, take out this high, start moving up. Bitcoin cryptos, they will be moving up. But right now, you're just fueling the fire for the next rip. That rip can go up. I don't think it has much of a rip left to the downside. I think at worst, if we look at Bitcoin here on a 3-day chart, at the very worst, I think you'd be in the high 90s if Bitcoin does sell off some. So when you're looking at this 3-day chart, Simple concept here, guys. You have some different patterns that have played out. I've been over these many times. I don't want to cover them again, but it gives us our targets. The 109 target, 1099, hit that thing perfectly. 32% sell-off, right? As of right now, we didn't get to 132, we got to 125, but look how you're holding that 1099. You see that? You did get below it a couple of times, but you're holding that key support level, and if it did come down more, like I said, I think you can get to the high 90s on Bitcoin, and that's super bullish if it does happen to dip back down to the high 90s. You have all that candle support down here, and this thing's just going up once again. So each time you've made one of these critical tops, you've corrected 33%, 32%, and right now this is not a big correction. This is hyper bullish, what you're doing right here on Bitcoin. And your deepest level so far was what, 14%? So less than half of what you've previously done. So you could come down more to the high 90s, still be hyper bullish, still achieve these higher level targets. And it's all just part of watching what happens with Bitcoin, what happens with the markets. You have to know what you're looking for here, because the cycle is your roadmap for how this is going to play out, okay? These larger targets, I believe, are ahead, 132, 168, and that 150 is just between them. So when we look at Bitcoin zoomed in here, we have a couple different patterns playing out. We had the excellent M fractal play out, right? We had our M fractal, the breakdown, breaking your neckline, and then you came down to the 1272 off the pattern, and here you are. So what pattern are you making now? Well, as of right now, you have a coil that's forming, right? So you have a coil that's forming. This is an 8-hour time frame. You don't have enough information here yet, but you can see where you failed. You failed at the 618, literally like almost to the dollar, 117,896. That's the fib from your all-time high to that retracement low. Failed at the 618. You did something crucial here, though, when you did fail. You made a low, you came up, failed at the 618, you pulled back, and now you're trying to rally back up. That's your higher low. If this is bullish, right, if this plays out bullishly, and this was your low right there at 107, then what you'll see form is a W reversal fractal. After the sell-off, you have a higher low, and this needs to come up, and this has steps. This has to take out the 118, you have to take out your 125, and you have expansionary targets above you. And guess what those targets are? Those targets, the immediate targets, you're going to see 135, and you're going to see mid 140s in here as well. Okay, that's what you're going to see here. If we look at this, throw this on the 200%, 1618, look at some targets. If and when we break out above 125, 135, or 141. Those are your immediate targets to look at if you can break out. But as of right now, you're simply in a coil. And you can also look at this. Where is this failing right now? This current rally, right? This higher low rally. Look at your next leg. Go to that high at 118. Pull down the fib. What'd you hit? The 618, once again, right there at 114. So there's steps to how these things play out. You're in a coil, you're building energy, you're adding fuel to the fire. You want to continually hold higher lows if possible, right? Because this will give you a low, a higher low, a higher low. Come up above this, start breaking out, get above that 118. That'll be key. Break above 125. Bull runs back on, right? You're going up for the blow off top. Conversely, if you start breaking down, you have to look at those levels where you could retrace to, right? When you look at those levels where you can retrace to, I've showed you this a couple different ways, but I think you're coming down to that high 90s if you were to break down. Right now, no signs of a breakdown. You have a sideways market, but that's just a level I would be definitely paying attention to for Bitcoin to track to if you start breaking down. But you don't have that momentum yet to do that. You have sideways momentum. Here you can see 99K in play and 104K in play as well. Those would be the immediate two levels below you. So I'd be looking at the high 90s if this was to start breaking down. But you're mid. I mean, you're literally retesting the base of this previous trading range. There's your fractal right here. So you're trying to get back into the previous trading range, and you got steps to do. You have work to do. It's slow. It's tedious. It's boring. It's how Bitcoin is sometimes. We look at the canary. You're bullish here on the canary RSI. Momentum, you flip bullish, but you're below the median line, right? the 0 line. So you're still, it's bullish. You got the bounce, but you need the wave to cross, right? You need the wave to cross the median line, and that's how you get the propelled move up. So this is just something to watch and see how it plays out. So far, it's kind of a nothing burger. I know you can trade these smaller moves here, guys. We got guys in the Discord doing these trades, taking these waves up and waves down, but you're just chopping, waiting to see what the market does as well, because you need ultimately more money to enter the marketplace. If you look at Ethereum, similar concept. We have the defined trading range here, right? We came up to the all-time high, took it out, and now what are you doing? If you look at this just from this perspective, you have your trading range up here, right? Your Wyckoff fractal. There's your trading range. You're essentially back testing. So you chopped around, made some down thrust, made an up thrust, got weakness, and now you're back testing that previous trading range right there at 4,000, 4,100. That's where you're stuck at right now. If you were to get some continued weakness, look for Ethereum to move the 3,500 down here in this cluster of candles. Same as over here, right? The 618's at 3,200, and you got more candles for support over there. So you want to see what Ethereum can do. If it can climb back up and stay in this trading range, that's bullish. If it just gets stuck there, right there at the base of the trading range, you have to look for bearish catalysts to see if this thing's going to drop down more. So let's look at some indicators here on the daily time frame. I mean, your canary's still bearish, momentum's still bearish. That's a daily time frame. You got to rally up, selling back off, trying to hold that 4,100 level. You can clearly see how important that 4,100 is, right? You held it here, you tried to hold it, bounced up, sold off, and now you're trying to hold it again. So 4,100 is important. If you lose it, watch 3,500, watch 3,200 beneath you, okay? So you're kind of back testing the range. Let's see if you get some further selling. If you can hold this level, if you start descending, you want to come up back into that range. 4,400, 4,500, get more mid-range in there. Continue your coil from higher up. If you look at Solana, same thing. Got a buy signal down here as well in Solana. You got a little rally back up. But look at your trading range here. Again, I mean, this trading range has been in effect for a long time. Going all the way back to March of 2024, you got above it, made your all-time high, cratered down. Where'd you fall to? Made a down thrust right outside your trading range. Bullish uptrend the whole way up now, right? You have this bullish uptrend. You made that high at 253. What are you doing now? So let's zoom in on this as well. Let's open this up. Look at Solana. You sold off, fell below the top of the trading range at 205, and now you're right there at 205 again. So again, Solana, when you look at everything, you want to see your patterns, you want to see your fibs. If you look at this from a top, pulling it down to the bottom of that current retracement, get some lower level fibs put on here. You hit the 382 at 214. You sold back off to 205. It's all you've done here. Daily time frame. So if we want to get some more candles here, let's go to the 8-hour time frame. You want to start looking. If you start taking out some lows, it's going to be important to watch. The bullish reversal would be your W. You have the M fractal top. Again, I teach all this in my education series, guys, right there on YouTube. If you get a bullish W reversal, this is how you can get higher upside, right? If you take out that fractal low right down there at 190, then you're dropping down to these lower level targets, and you can view it as waves. You can pull your fibs different ways, but key fib here, or key level here, is going to be starting at 155, pulling that up to your 253. Get rid of that. Look where you fell. You fell to the 618, right? So you fell right to the 618. You're rebounded up. You're trying to hold the 50% as support, which is 204, right? Lines up beautifully with the 205. So again, it's just an important level. When you're watching this on smaller time frames, you look for little patterns like on an hourly, 4-hourly, little double tops and things that could drop you, or reversals to the upside, right? Bouncing back up, trying to make some higher lows, trying to come back up. But again, that's just how these markets are. They're kind of tedious. They're kind of boring. You're selling off, you're bouncing up, you're going sideways. That's where we are in the markets. So we'll see how all of this plays out, guys. Again, give me a follow on X at Market Canary for future updates. Consider checking out the Discord. Hope to see you guys in the room, and you guys have a fantastic week.